Welcome to Cal CPA's Tax Bill Series. I'm Annette Nellen, professor at San José State, and we're going to do a few wrap-up topics here on the OBBBA. First, just a few reminders in dealing with new law changes. The OBBBA does have a little over 100 changes, so it is immense. If you feel overwhelmed, you should, because that's a lot of changes there. And many of these changes still going to require guidance from the IRS, changes to tax forms. That's going to be certainly well over the next probably even over a year for the IRS to get all of that taken care of. For your own practice, certainly be changes to your organizers, change maybe to engagement letters, things you want to stress with your clients. And then when we talk about these changes, I know, like, for example, we talk about tip income. Well, the first thing that comes to mind is the tipped employee or the tipped contractor. But these provisions have relevance beyond all of that. Certainly the employer or the payor is going to need to be tracking these. And for 2025, the IRS has said there won't be any changes to W-2s or 1099s for this, but there will be something for 2026. So it's certainly relevant to any industry where they have tips involved, not just the employee's relevance or 1040, but the employer and the payor. The processor, if the contractor's collecting their revenue via PayPal or Venmo, I'm guessing the IRS is going to tell these third-party settlement organizations, TPSO, that they are going to start asking the payors, when you transfer money because someone provided services to you, please indicate how much was regular fee, how much was a tip. Because otherwise, how could that third-party settlement organization get the payment and the tip on the 1099K starting for 2026? And again, we're still waiting for guidance from the IRS, but it's very clear in Code Section 224 that something's only a qualified tip if it's reported on that form. Now, of course, it can still be reported on there, even though it's all combined into the total fee that was paid to the contractor. And customers might be interested in understanding, when something going to be a tip. If someone's, for example, making contracts at hotels for a conference and you see there's a service charge added on, they might be wondering, hey, is that something that the employees are going to be able to exclude from, deduct from their income? So they might be asking. And then, of course, the companies that help process W-2s and 1099s will have to deal with that. Similar with the Trump accounts, we think, oh, it's relevant to the individuals. Well, it's also relevant to employers because there's a Code Section 128 where they can set up a written plan. We don't know how that works yet until we get guidance from the IRS, where they could transfer money to their employees that would be then tax-free to them under new Code Section 139J. And it's also going to be relevant as to, who's monitoring these accounts, because they have to have only certain types of investments for them. So administrators are certainly going to be interested there. And then certainly change in planning, where certainly any of your clients who might want to be setting up 529 accounts or other things are going to ask, well, should I put it just in a 529 account? Should I also put it in the Trump account? Should I encourage, like the grandparent, should I encourage my children to get these accounts set up for my grandchildren, all that? So, just remember, there's going to be wider application than who we immediately think is going to benefit from these provisions. So there's a lot in here. A few reminders on planning. Certainly think about things you've told clients in the past. Has anything changed here? A few examples: having permanent rate structure for individuals, a permanent 199 cap A. That's going to make choice of entity decisions a little bit easier. As I noted, planning of if someone does want to help, whether their own children or grandparents, helping the children or grandchildren with 529 accounts, 530A accounts, because there's been an expansion of what a 529 account can be used for. Might make that of greater interest for somebody to get one set up for their children or grandchildren. And then as part of planning, we also think, well, where are these changes? Where do they fit into the tax formula? Because that's going to be relevant to figuring out their marginal rate. If they're subject to any phase out, what's their modified AGI? And just want to note that the new deductions, like for tip income, overtime, the seniors, the car loan interest, those can be claimed even if you don't itemize your deductions, but they are from AGI, just like the standard deduction and the 199 cap A deduction. They're from AGI, but you still claim them if you don't itemize. And I have a excerpt here, or actually the full text of Code Section 63B, that lists that these are from AGI. So these deductions are not going to lower your AGI. Additional reminders when we have law changes, how is record keeping change? And what we'll see starting for 2026, that contractors will get fewer 1099 NECs and 1099Ks because the threshold will go up, but they still have taxable income. If they did work for somebody that was $1,800, 2025, they're going to get a 1099 NEC if they did it for a business, but they won't be getting one for 2026 and beyond because the cap goes up from 600 to 2,000 starting in 2026. There may be a reminder to folks, hey, it's still income even if you don't have a 1099 for that. Also, record keeping so far as differences between California and federal. Just give one example here. We now know for federal that permanently there is no deduction for home equity debt. That used to be pretty much an automatic deduction no matter what you did with the proceeds, unless you bought tax-exempt bonds with them. But now we would use the interest tracing rules when you have a home equity debt. And if you had used the home equity debt to make improvements to the home, that's actually acquisition debt, and that's fine. But for California purposes, it's still home equity debt, automatically deductible on your Schedule A up to the 100,000 of debt. If they want a different result for California, they have to elect to treat the debt as not secured by their residence. We're going to have more reporting forms starting 2026. There'll be some kind of reporting form for the interest on auto loan if it's a domestic auto loan. Contractors who get tips, this is one where they're going to have to give some thought to what they want to do, because I encourage you, go and read Code Section 224A. In defining a qualified tip, it has to be reported on a 1099 or 1099 NEC or a 1099K. Well, if you're a contractor that provides services to households, for example, or non-businesses, they aren't required to give you a 1099. Now, if you're charging by credit card or you're charging by PayPal or Venmo, yes, you should then be getting a 1099K. But if they're taking cash or check and they are getting tips, they're going to have to find some way to get that reported on a 1099 in order for that to be enable them to get a tip deduction for that. And then reporting forms, California, I think it still might be $600 threshold for filing those. Wait to see what California is going to say about the issue of the conformity report, typically in January. We'll watch for that. The IRS has already started releasing new draft forms. And then the very top one, they have a website where they post changes to existing forms, and they don't always get any kind of an announcement like a news release. But in looking at it the other day, there was one saying, hey, do you want to change your withholding for 2025 because you're going to have perhaps new deductions on it? That's the first link there. And then they already have noted for the W-2 for 2026, there'll be new codes for box 12 for reporting if they had tip income, overtime income, or the employer made a contribution to their Trump account. And so far as resources, we have the text of Public Law 119-21, and that's something you definitely want to make sure you're referring to. And along those lines, if you are finding the code through a free resource, be cautious. Free does not always mean it is up to date and perfect. Usually it means there's something is missing. And I know if you use a website, like even by a law school, I know for sure, because unless they've changed it, but they have not updated, for example, Code Section 25 Cap E and 45 Cap W, which makes you wonder which other ones did they not update. But you can see the text of the actual law by going to that website, congress.gov, and pulling that up. I know more and more today, people are using all kinds of Gen AI programs to say, hey, could you just summarize this for me? With students last week in class, we were doing something regarding the tip income, and it wasn't until I asked, hey, could you give me the answer tied to OBBBA? And it came back saying, what's OBBBA? It did not know. Then I realized that the tip income information it was giving, which wasn't accurate, was talking about some other kind of tip income in the law. We are always responsible to check whatever the tool is helping us to do, but we need to check it against the actual authority there. Senate Finance has a nice section-by-section summary. The IRS has a website now where they're listing news releases, though I noticed it wasn't complete because, for example, there's a Rev Proc 2025-28 on the R&D changes not linked at the OBBBA 2025 provisions there. And then, of course, search AICPA, CalCPA websites. And then I have a few track changes if that's helpful for finding items. All right. Well, hopefully I've given you a few things to think about as we wrap up. It's going to be very busy so far as trying to, get into some of the provisions that some are pretty complicated and then watching for guidance from the IRS over the next year. So thank you. Be sure to watch other episodes in our series on the tax bill. Thank you.